Back to our top story. So what are these measures? All SVB depositors will have access to all of their money. On Friday alone, depositors tried to withdraw a whopping $42 billion. Now, this is access to the money today. Additional support will be provided to the banking system. US regulators guaranteeing at the moment that access to emergency funds will be made easier to banks. This was backed up by the Fed, which has said it would facilitate borrowing. And to show just how seriously the US authorities are taking this issue, US President Joe Biden made a point to reassure the market himself. The American people and American businesses can have confidence that their bank deposits will be there when they need them, he said, adding, firmly committed to holding those responsible for this mess fully accountable and to continuing efforts to strengthen oversight and regulation of larger banks so that they are not in this position again. Those are the words of Biden there. And to avoid the spread of this problem to other financial institutions, to avoid contagion, regulators took the decision to close another bank, Signature Bank, which on Friday alone lost 22% of its already dwindling value. Like SVB, Signature Bank was closely linked to the tech sector. Almost a quarter of the bank's deposits alone came from the crypto sector. So how do all these measures translate onto the market now? We've already seen the boost it gave, or rather early lift to equities. The dollar weakened slightly. Let me show you the dollar here, dollar basket rather. Weakened slightly by Friday's non-farm payrolls, which wasn't really a bad figure, to be fair. Lost more ground, the dollar basket hitting a near 1 month low. Let me widen out the chart there for you. We're approaching that 10,300 level. As you can see, a narrow range there between 10,500 to 10,300. And we look like we are heading down towards the bottom end of that range. Certainly the momentum indicators are pointing downwards as well. The dollar fell as much as 1% against the yen as well. Let me show you the cross for that. As you can see there, a slightly similar trend line. The SVB collapse also means that markets are now speculating on the Fed not being as aggressive on rate hikes as initially. Now, some investors think that the rate hike later this month is no longer baked in. Before the SVB collapse, Fed funds futures implied a 50 basis point hike at the next FOMC meeting. Now, this scenario has been priced out. 14% now reckon that Jerome Powell will keep rates unchanged. Let's take a look at gold as well, because we've seen a bit of a reaction there. Here's spot gold up there for you. Now, thanks to the non-farm payrolls data, the precious metal had already recorded its best daily performance since November last year, as you can see here from this chart. However, measures announced by the US administration is sending gold one leg higher. It now trades at around 1876, heading towards that 1,900 figure.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.